Hi, welcome everyone again to another one of our SAS Facilitator Support webinars. For those of you who haven't yet met me, I'm Kathleen Davey, Chief Operating Officer and Clinical Psychologist at the Social Skills Training Institute, and I'm joined here today with Josip.
Hello.
Who is the Director of Business Advisory at Vincent, who's taking us through a webinar today on cash flow, service modelling, practice management, to help you with the business and accounting end of your services when you're running SAS. So I'll hand over to Josip to introduce himself more and take us through.
Thanks, Kathleen. So before we start, just a quick important message, just a little bit of a disclaimer. So while every effort's been made to provide valuable and useful information in this presentation, this firm and any related suppliers or associated companies accept no responsibility for any form of liability and reliance upon its contents. A bit about me. I'm one of the directors in Business Advisory, and I provide business improvement advice for health industry clients by working with them in introducing systems and processes and delivering tailored reporting, benchmarking and KPI analysis. They're my details just below on the slide. So what's been covered today? So the first part of the session, I'll cover a bit about practice management and provide some tips for efficiently offering the program. Then I'll go into reporting and looking at what sort of reporting you should be looking at, as well as, I guess, what you can do to sort of look forward in terms of your cash flow requirements in terms of operating the program. And then thirdly, just a little bit about the firm here at Vincent. So hopefully, at the conclusion of today's webinar, your key takeaways essentially look at your outflows, understanding what your outflows are in delivering the program, and then looking at how you can optimize, I guess, those outflows, and then looking at strategies you can put in place to sort of reduce costs or share costs that will sort of allow you to, I guess, provide a more cost-effective program. And then looking at your inflows, so what type of patient, and recognizing, I guess, when those income streams fall, very important from a cash flow planning perspective. Pricing, another important perspective. How do you price the program? Obviously, it depends on the type of patient you're dealing with, but we'll go on to a bit further. Practice systems. Do you have the right systems in place that help make efficient use of your time? Now, obviously, any system you put in place has a cost. However, I'd bet that you'd save some time in using the systems, and then that should offset, I guess, the cost of implementing those systems. Accounting systems, I'm an accountant, I believe they're important. So looking at what systems you have that record your inflows and outflows, and then the types of reports you should be looking at. So the profit and loss, so how profitable is the activity? So looking at the program in isolation, what effect is it having on other aspects of your practice? Your balance sheet, so what are your assets and liabilities of business? Most importantly, for you guys, it'd be the amount of money that's owed to you from customers and the amount that you owe to sort of suppliers. And then lastly, how to budget and cash flow. So do you have any bumps in the road ahead? So depending on how lumpy your cash flow is from getting your inflows in and then the timing of your outflows, what measures do you have in place to help iron those out? So we'll go into the first bit, which is about practice management. So some tips in, I guess, efficiently operating the program. So it's an unknown saying, but revenue is vanity, profit is sanity, but cash is king. So for you guys, it's not so much the profit that is, I guess, important. It's making sure that the cash flow is stable enough to support the program and doesn't have an impact on what you do outside of the program. So hopefully what, as a result of this, you'll understand what your key outflows are and also what are your inflows and when do they fall. How do I measure my inflows and outflows? How do I project future outflows? And why? Well, the end goal is to maintain a stable cash flow. So what are your outflows? So essentially in operating the program, you've got marketing costs. So I would imagine you'd have to get out and, I guess, drum up business or get your clients in, your customers in. So what systems have you got in place to, I guess, efficiently put in place, email marketing, that it doesn't require too much of a manual touch. if you're doing it manually, it's going to be utilising your time, therefore taking away from seeing other patients, where you might be able to implement a system that saves you some cost there from that perspective. The actual cost of the family kit. So from what I understand, it's a price per single, but as the volume of the as you increase the volume of the orders of the kits, the individual unit price comes down. So it may be that you manage that, again, in conjunction with your marketing, understanding how many patients you've got coming through potentially in a single program, or whether you've got some programs that are running concurrently to each other, that you're able to do a bulk order of kits to get the cost of the kits down. Looking at facility fees. So what are your rent and your other outgoings of, if you haven't got the space within your own sort of clinic, what's the cost of actually renting, a facility to coordinate your, your catch-ups with the kids and the parents. The opportunity cost of your time. So whenever you're looking at the outflows, you need to make sure that you include, the cost of your own time. It's a lot of people forget that. And then end up working away for nothing. So ensure that you've put some sort of cost in there for your time. Look at the materials in delivering the program. So that may be things like printing and stationery that fall outside of the kit. There might be some sort of little amenities like drinks and snacks that you might provide as well. So ensure that you capture all of those. Then you've got the administrative costs, so whether it's yourself or whether it's you've got secretarial staff that are, assisting you in delivering the content, and also getting the patients in and coordinating appointment times. So you need to make sure that they're all adequately captured as well. Any software costs. So I'll go into some software that you could potentially implement a little later in the presentation, but again, you may want to sort of function or factor that into your costs. And is there anything else you can think of in terms of running the program? So ensure that you capture everything. So the key is with the outflows is just making sure that you capture all possible outflows in terms of running the program. In terms of how you can make efficiency gains, if you have sort of some programs running concurrently, you may be able to sort of save on facility fees by essentially sharing the patient sessions, the parent sessions, in the facilities to get those costs down, and at the end of the day, reduce the cost to the patient. So I'll pass over to Kathleen here. She's probably got more of an in-depth knowledge about the breakdown of the program, but we've got this slide up here.
All right, thank you, Yo. Let's look a little bit more at the specifics of the elements of the program, your time, what might be considered part of your overall SAS small group program costs with time, and some of the timing of when your outlay is of your money versus when you're actually doing things, or the incoming of your money versus what you're doing things. Just briefly. So firstly, there's the intake and pre-assessment stage of SAS. Now, this might be something that's treated completely separate to the program itself, because you may go through intake or start intake, and it may not be SAS that the family end up doing. So you could treat that separately. And that could be anywhere from a 1-hour intake interview with the parents and the child through to a full 2.5 to 4 hour intake process, including all of a school visit, with travel and doing the optional observational assessment. So that's the intake and pre-assessment stage. So it may form part of your program costs, or it might be a separate thing. And an interesting suggestion that Yo made to me earlier is that sometimes, depending on how you go about this could even be treated as part of your promotional or marketing stage in the process, if it's more around screening suitability rather than actually doing the program. Okay, then the next bit on the table here, the family kits, that consumable resource that everyone uses through the program and keeps long term. One of the main points here is the timing of this. So you need to order those at a minimum 2 to 3 weeks prior to starting your SAS group program. So that means when Yo gets to cash flow more specifically later, the timing of when you're actually purchasing this versus when you're delivering the program, or perhaps when you're receiving the payments from your clients. It can be quite a different time period. Then also the next stage in the table here is your preparation and your debrief time. Now this will be very different for different facilitators depending on your experience, whether you have a co-facilitator or not. The first time you run the program, it might be up to 15 hours of preparation and debrief, getting your materials together, reading your manual, talking with your co-facilitator about behaviours and learning adaptations, all of those things. And then as you get more experience, that might reduce. You might be delivering it on your own, so there's less people to talk to in your preparation and debrief. But that's something to remember and to consider and to include. Then there's your direct contact, direct session time with the children and with the parents and with the teacher check-ins or teacher support. Now with this one, it could be allow 26 hours in total, remembering that it'll be different in terms of the number of families that is servicing during that 26 hours. You might have one facilitator's time with 3 families. You might have 2 facilitators' time with 6 or up to 8 families at a max. You may be running a group that has an additional assistant. You might have a student who it's not actually an outlay, like a volunteer student on placement, or you might have an assistant that you're paying. So that 26 hours could mean a variety of different things depending on the group that you're running. And that 26 hours may not be exactly how you're running it. But remembering you'll have anywhere from, say, 2 to 3 up to 8 children, and 1 or 2 facilitators, and maybe an assistant included in that as well. So do remember that when you're thinking about all the different components of what's coming in and coming out with the program. And another thing I don't want to forget to mention is some of those little optional extras that you might like to plan in at this stage. Things like when a family misses a session, if they're sick 1 or 2 times and you want to be able to provide an additional makeup session, maybe individually, do you want to factor that in now, or do you want to price that separately or charge them separately, invoice them separately when it happens? Things like that might be worth thinking about as well. I'll hand back over to you.
Thanks, Kathleen. So again, I guess we look at what type of patient you see. So for our Australian sort of listeners, you might have NDIS patients. So the remuneration is received based on the NDIS items delivered. So really you don't have too much control other than making sure that you capture all the items. Then you have private patients. So these are fees set on a commercial basis between the practitioner and the patient. Then in terms of the schools, you may be sort of engaged by the school to deliver the program to a bunch of students, or alternatively you might seek out a bunch of students at the school and use the school as the facility to deliver the program. So I came across some statistics published by the Australian Bureau of Statistics. It may be something that you might be already aware of, but according to the Australian Bureau of Statistics survey, an estimated 164,000 Australians had autism in 2015. This represented an overall prevalence rate of 1 in 150 people. However, we know that there's other publications out there that have the rate of prevalence to about 1 to 68 people. So the number of people with autism in Australia has increased considerably in recent years, up from an estimated 64,400 people in 2009. So the first aspect of income is the NDIS. So historically, the government services commonly provided were under the National Disability Agreement. So and also the Helping with Children with Autism program for, I guess, the children under the age of 7. But these are progressively being transitioned to the NDIS. So in doing some research for this, I looked at some of the government data. And in 2014-15, there were around 43,500 NDA service users with autism as their primary or other significant disability, representing about 13% of all NDA users. So by 2017-18, 6,248 service users of those service users were transitioned to the NDIS. So if you look at the table at the right, you'll see that there is a table of NDA service users with autism by service group. So you can see that 64% of the service users used the community support services. These services provide support to live in non-institutional setting and can include therapy support, early childhood prevention, and behavioural specialist intervention. Now, the Secret Agent Society program obviously fits into that category, so I'd assume that there would be a greater demand in the future for the program that you offer. The next aspect is, I guess, how do you price your private patients in schools? So in reality, there's only two options here. So the first one is an hourly rate plus your physical costs. So again, it places a great importance on understanding what your outflows are and what your costs are. And then the hourly rate is essentially to cover your time in delivering the program and the time of your co-facilitators. Now, the second option is a fixed price. So this is essentially value pricing. So with value price, you can either have it paid up front or you could repackage the program and then price it in stages. Now, the issue with pricing it in stages is that you might have some disengagement at the back end of the program, and then you're stuck with the cost, but not necessarily the income coming in those later stages. So in reality, you just need to weigh up those sort of consequences in terms of delivering the, I guess, the pricing strategy. At the end of the day, the price you charge is driven by the market. However, I think the quality of the service and patient outcome is a clear differentiator in the price that you can charge for the program. So the University of Utah have come up with, I guess, it's an original formula by Dr. Michael Porter out of Harvard in terms of the value equation. So the University of Utah Health have value equaling quality plus service divided by the cost. So in this case, you'd need some sort of evidence once you've delivered the program as to the quality and the service provided as part of the program, and definitely like monitoring outcomes. So it becomes important once you deliver a program to get some evidence as to how the program's worked, how your style of delivery has given better outcomes, because this can all lead to sort of potential increases in the price you can charge for the program and delivering it. It may be that you add a few extra bells and whistles that also enables you to get the pricing of the program up. So one of the most important things I think is relevant to any business is its accounting system. Me being an accountant, I'm okay saying that. What I would urge is using accounting software to record your business income and expenses. The system you adopt needs to suit you and the other users of the actual software. So, for example, bookkeepers might have preferences in terms of what they use for accounting software. Your secretarial staff or yourself might even have a preference in terms of what software you use. It needs to be able to be used by you. And all users need to be comfortable using it. Now, with I guess accounting packages these days, there's a variety that are cloud and I guess desktop. So the next question is whether you go cloud or not to go cloud. There are some good benefits with cloud, as you can get sort of multiple users onto the file, whether it's your advisors giving you advice, as well as other staff plugging into the system all at the same time. And there's no sort of duplication of data. In terms of desktop, I guess it's obviously a cheaper option, but you don't have that flexibility. Now, another common mistake I see is, I guess, practitioners not employing bookkeepers or having adequately trained people enter the data. So I'd urge you to employ a good bookkeeper, or if you've got your secretarial staff who are commonly used in terms of data entry, ensure that they're adequately trained, because at the end of the day, garbage in, garbage out. So you won't get what you need out of your accounting system if the data in there is not up to scratch. The accounting software should be used to keep track of the debtors, so people that sort of owe you money. This again assists with driving your cash collection, and creditors, so the people that you owe money to help them manage your outflows. So that comes down to timing as well. So you might have terms on particular suppliers. Say, for example, the rent of the facility might be, not payable for another 30 days, for example. That all helps in terms of managing your cash flow, but understanding when that is to fall due is key. Now, the accounting system should be kept up to date, not compiled at sort of quarter end, as most businesses do, just to allow better planning around forward cash flow. So again, with the cloud and how that system works, it's pretty easy to keep it up to date and pretty live, with bank feeds coming in, every day into the software. The other aspect of systems is essentially some practice management side of things. So have you got a system that sort of captures your time and allows you to invoice efficiently? So I've got practitioners where they'll type up their invoicing in Microsoft Word, along with the item numbers, a description, all manual, have an amount on the right hand side, then you go to the total, and the totals actually hasn't added up properly, or the date at the top of the invoice is incorrect. So not only that, but it's taken them probably half an hour of their time to get that invoice together. Whereas if you had a system in place, it's at the click of a button. I went and saw my physio the other day, and literally the invoice was done as she was saying hello to me, and I had that invoice. They took my private health insurance details, and I had paid it within 2 seconds. So have you got a good system that adequately and efficiently records the use of your time and the time of your co-facilitators, so you and your secretarial staff are able to generate invoices and collect payment as quickly as possible. So another thing is, have you got systems in place to adequately market the services of the practice, including the Secret Agent Society program? So it could be email marketing, it could be a whole raft of things, looking at your existing customers and making sure that they get content that gets them coming back. Have you got efficient document generation and practice management system? Again, a lot of people do this manually. It might be typing up documents in Word from old templates. It might be an old template document that you sort of edit every time to write a report, for example. There's systems out there that allow you to sort of within the patient file write the report then and there, using fields that you can capture along the way. Again, just making more efficient use of your time. Are the systems you have in place integrated? Again, this is just to avoid double handling of information. So there's no good having one system that sort of acts as a standalone system, and then you've got to re-enter the data into the other system. It would be ideal if the two systems sort of talk to each other, and it just allows you, again, more efficient use of your time and the people entering the data. So here's an example. So this is a cloud-based sort of suggestion. I've broken it up into sort of three areas. So income on the left-hand side, and then expenses on the right-hand side, and then essentially your accounting and reporting in the middle. So if we start on the left-hand side, this is essentially, these are two examples. There's hundreds of them. I urge you to do your own research in terms of coming up with an ideal solution for your practice. But I've just picked on Clinico and Power Diary. So these are two cloud-based full-service practice management software. So they essentially administer the patient information. They manage your diary. They manage your appointments. They manage your your marketing. They also manage, I guess, reminders to patients when appointments fall. So there is no manual sort of manual data entry required in this sort of thing. So with Power Diary, as I understand it, also it links in with sort of Medicare and the DVA, whereas Clinico doesn't. So in this instance, once you've seen a patient, you've generated the invoice, say in Clinico or Power Diary, those invoices are automatically, or those patient invoices are automatically pushed into Xero. So again, it gets rid of that double handling that I was talking about in the previous slide. So Xero will receive that invoice as essentially it'll book the income and the amount owed from the customer. The bank feeds will then capture the payment from the customer and apply it against the invoice in Xero, and then Xero will then also push back that data into Clinico or Power Diary, essentially recording it as paid. So you can see that there is no sort of double handling, and the systems are completely in sync. So Xero is, I guess I'll touch on Xero. Xero is a cloud-based sort of accounting system. So it does payroll, debtors, creditors, and it also does sort of just a bank feed. So essentially you link it up with your bank account, and the transactional data gets pushed through on a daily basis. So in terms of being live, it is as live as as possible. So at the end of each day exactly what your bank balance is, who owes you money, who do you owe money to. Now, in terms of the right-hand side, we've got Receipt Bank or HubDoc. So these might be a bit of overkill in terms of if you're a smaller practitioner, but I'll just run through them anyway, because Xero does do it, but it's a little bit of a manual process if you're just using Xero for this side of things. So with Receipt Bank or HubDoc, essentially it's a cloud-based software solution that captures your supplier invoices. So I'll use an example of, say, your telephone invoice. So you receive a telephone invoice. If you receive it via email, you can just forward it to an email address within Receipt Bank or HubDoc. HubDoc will then, or Receipt Bank and HubDoc will look at the details of the invoice. So they'll look at the name of the supplier, when it's due, the date of the invoice, and the amount of the invoice. It will then push that data into Xero as an invoice, and also attach a source document to that transaction within Xero. So it's quite neat. So in terms of your accountant asking for copies of invoices at year end, if you've implemented this system, it's no longer required, because all your invoices and copies of invoices live in Xero. So again, it cuts down a sort of filing that you've got back at the office. So the next thing we look at is, I guess, reporting. So what should we be looking at, or what should you be looking at? So Warren Buffett is quoted as saying, accounting is the language of business. I agree with him. You need to know your ins and your outs in order to work out, I guess, how much you're making, and then also you forward forecast your cash flow, as well as any tax payments that you need to make, whether they be quarterly PAYG instalments or your year-end tax. So I guess, how do we get the accounting reports into ship-shape form? I guess we use the technology to prepare timely and accurate financial information. So I touched on that in the slide before. Using cloud-based systems will get you sort of real-time data. Desktops, there might be an element of sort of manual data, but data entry. But if you're on top of it, or your bookkeeper's on top of it, you can get close to real time as you can. Now, what can you deliver out of your accounting package? Well, you look at your trading profit and loss position, a balance sheet, and then you look at your cash flow. So I guess, why do we need this accounting information? It's to assist them in making decisions and act on opportunities that exist to achieve your goals, whatever they may be. So it might be you want to take an extra 4 weeks off each year. Using the financial information will help you achieve that goal. The first aspect of reporting is the profit and loss statement. So a profit and loss report shows the profitability of your business over a specific period of time. And that's an important aspect of a specific period of time. It can cover any period of time, but is most commonly produced monthly, quarterly, or annually. You can also slice and dice your profit and loss report depending on the service lines you offer. So in your example, using the software that you've got, you'd be able to run a profit and loss report for the program itself, so you can understand the inflows and outflows that have occurred historically, and whether you're making enough money from the program, and also looking at that in isolation from your other sort of clinical income and expenses. So generally, a profit and loss statement will show income and expenses of the business, with the difference being between the two being either a profit or loss for the period. All right, so bring it to equation form. So the profit loss equation essentially is your sales or your income lines less your cost of goods sold. So the cost of goods sold are your costs that are directly attributable to delivering those service lines. The difference between those two gives you a gross profit. Now, what you do to your gross profit is you add your other income and take away your expenses that aren't directly attributable to your income, and that leaves you your net profit or loss. So it's a fairly simple equation, but it's an important one to understand. The next report we'll look at is essentially a balance sheet. So a balance sheet is a statement of a financial position of a business that states its assets, liabilities, and the net asset position at a particular point in time. So whereas the profit and loss statement was over a period of time, a balance sheet is at a static point in time. So whether it be 30 June or whether it be quarter end or whether it be half year end. So note that the difference between the profit and loss statement and the balance sheet is the balance sheet states that financial position at the point in time. It's not the movement. Again, this places importance of ensuring that your closing period balances on the balance sheet are correct. Any misstatement in the balance sheet items, so that's essentially the money that is owed from customers and the money that you owe to suppliers, if they're wrong, it'll affect the reported profit and loss position of the business that's reported over the period. So again, equating the balance sheet to an equation, essentially it's pretty simple. It's your assets, so that's things like cash at bank, your plant and equipment, your debtors, so that the people that owe you money, any stock. So if you buy some kits, for example, that you just have sitting on the shelf, ready to go, they're all counted as assets. Take off your liabilities, so this will be stuff like, it'll be your creditors, so the people that you owe money to. It might be some loans. So if you say had a little small fit out for a meeting room, for example, that's a liability. The difference between the assets and liabilities is essentially your net assets or your equity in the business. Cash flow. So this is one of the most common questions we get as accountants when, I guess, clients try and equate what they've made from a profit and loss position to what they actually physically have in the hand in terms of cash. So profit doesn't always equate to cash, and it's due to, I guess, movements in, I guess, debtors. There might be some assets purchased or movements in creditors. So it's really the balance sheet items. If there's movements in those, then essentially it just means that the profit you've used has been applied to assets and liabilities before it's come out to you as an owner. So I'll just run through this quick example where you've got three columns here. So essentially you've got your income and expenses. So you've got your sales, your cost of goods sold, then you've got your other expenses that run off it in the P&L on the left-hand side. So you'll see the difference between those spits out a net profit of about $42 for the period. Now, from a cash flow perspective, of the sales, you only received 800 of them. So there's the increase in debtors is essentially you're short $200 because $200 wasn't paid from customers, so you're still owed that money. Now, your cost of goods sold, you might have some terms on those suppliers. So, in terms of your cash flow, you've only outlaid $350 of the $700. So there is an increase in creditors, or the amount that you owe to people, of $350. Now we look at your wages bill. So let's assume that you've got a wages bill of $150. From a cash flow perspective, all that leaves your bank account is $100. Now the reason why is there's a difference for the PAYG withholding that you haven't paid to the government yet. That usually comes out at quarter end. So essentially there's $50 that's owing to the government that you haven't paid out of cash flow yet. Your superannuation, again, it's not payable until sort of quarter end. This is specifically for the Australian listeners. So again, you've got superannuation that's payable, so nothing's left the bank account, but from a profit and loss point of view, you've recorded the expense. Depreciation is reported in expenses, so depreciation might be essentially the value that's of depreciation on your plant and equipment, so it might be your fit out. It's a non-cash expense, therefore it's included in expenses in your profit and loss. However, from a cash flow perspective, it hasn't cost you anything. And then your other expenses, they just outlaid when they're incurred. So there's no difference from a cash and P&L perspective there. Now, other things on the balance sheet that don't appear on the P&L might be some debt reduction. So in this example, there might say been debt on the fit out that came out in this period. So let's say $60 came out. There's no recording of that outflow in the profit and loss because it's not an expense. It's a reduction in a liability. And then you also had an income tax payment of $50 in the period. Again, it doesn't appear on the profit and loss. It's a reduction of a liability on the balance sheet. So as a result, what was a $42 profit you've now got $150 sitting in your bank account. So there's a difference of $108, which is essentially, if you were to spend it, would mean that you're kind of short in terms of paying your creditors and your PAYG withholding and your super. So it's important that you get your head across this to ensure that the temptation of spending the $150, you need to know that there's another $108 coming out at some point in the future. So it's very important to get a handle on cash flow, as it could lead you to getting unstuck very quickly. So in terms of budgets and projected cash flows, so for the period you're operating the Secret Agent Society program, it's important to monitor the projected cash flow. So start with a weekly timeline for the duration of the program. So whether it's the 13 or the 23 week program, and then each week input the costs and when they're expected to fall. So you at least know over the next 3 months when the costs are expected to come out of your bank account. Then what you do each week is then populate when you expect to receive the income from the program participants. No, this will vary depending on whether it's privately a private patient or whether it's NDIS funded. So be across when those inflows sort of fall and marry them up to when your costs are going to be incurred. So this report will then, identify weeks where cash flow will be tight or negative, and whether there needs to be any funding from your own, sort of cash reserves. So the next slide, I'll just go through an example of what that will look like. So you can see across the top in the yellow, essentially that's the list of the weeks for a 13-week period. Then essentially, what you would do is in the next, if you look down the page on the left, you list sort of your expected receipts and when they're expected to fall. And then the next section down is when you look at your operating payments. So when they're expected to fall across the page. Now, what that will show is whether you've got sort of surpluses or deficits each week. So I'll use an example of if you're pricing, if you're receiving your funds up front for your private patients. So you might have a cohort coming through, you might receive all that cash up front. So in the first week you might have an extremely large surplus, but in the remaining weeks in the program you might have deficit each week. So it's important that you understand that, and I guess it removes the temptation of also spending that upfront amount that might be sitting in your bank account. And just understanding what outflows are expected over the course of the program. So this report will help you do that. There might be another example might be that you buy a bunch of kits up front prior to the program commencing. That will obviously result in a deficit, which then should get recouped once you start invoicing your patients. So hopefully after today's session, the key takeaways you got. So in terms of, your outflows, just understanding what your outflows are in delivering the program, and then, the strategies you can put in place to optimize them. So some of those might include, running programs concurrently, and then making sure that you're sharing your resources, say for the parent meetings, for example, grouping them so you're saving costs from that perspective. Optimizing how you sort of communicate with your patients and putting systems in place. Inflows, understanding the type of patient, and then from there, how do you price the program depending on the patient that you have. So in terms of the NDIS patients, obviously that's going to be set by the government. So it's a matter of making sure that you capture all your NDIS line items that might be applicable in the program that you deliver. Pricing, so looking at the options in terms of how you price. So whether it's sort of the cost of your time plus the actual physical cost of delivering the program, or whether it's value pricing. So again, it's important in understanding the impact that your program's having. So it's the follow-up in terms of getting the data in how you've delivered the program, what can be improved, what worked well, what didn't. There is great importance on that if you are value pricing to get an indication of the quality and the service that you're delivering as part of the program. Another important aspect is the systems and processes that you have in place. So, practice systems. Do you have the appropriate systems in place that help make efficient use of your time? Yes, there's a cost of implementing these systems, and most of them are monthly. However, the time saving for you should greatly outweigh those costs. Accounting systems. As an accountant, I can't place more importance on this. Putting in place an adequate accounting system. You need to make sure that you have a system that sort of adequately captures your inflows and outflows, just to ensure that you're making sufficient income from the program, and that it's not sort of affecting your other clinical operations. So what I mean by that is if you're operating the program at a significant loss for any reason, or your costs have blown out, you need to make sure that you understand why and how you can correct that position in the future. And then the reports you look at, so the profit and loss, so how profitable is the activity? Again, looking at separating your profit and loss between your other clinical operation and the operation of the program, and then looking at your balance sheet. So what assets and are the liabilities of the business? Again, very important from a cash flow monitoring perspective. Your cash position might be strong, however, that may be strong because you haven't paid the people that you owe. So keeping a handle of that is really important. Then looking at your budgets and cash flows. So this is more importantly surrounding the program. So look at your inflows and outflows of the program. So the key is understanding them and when they fall, and then looking at, over the period of the program and just mapping out where you're going to have surpluses and deficits, and then how you can iron those out. So if you might have a deficit where the cash from the program doesn't come in until after that particular week. So you might have to dip into your own cash reserves, to help facilitate the program. But then you've got you understand you're able to sort of get that money paid back at the end of the project, at the end of the program, once all your patient fees have been collected. So hopefully we've covered a lot of information today. So if you need any further help, here's a bit of information. That's what we do at Vincent's. So we have a pretty holistic approach to all things numbers, and especially people in your field. So we look at sort of ways we can help you improve your business practices and drive your business growth, whilst looking at your sort of compliance and ensuring that you're compliant with sort of tax legislation, and then also giving you some improvement advice as to sort of optimising your expenses. So if you need any help, by all means, get in contact with me or any one of the team here at Vincent's. In terms of the other service offerings we offer, we look at assurance and risk advisory. Business advisory is the division I sit in, so we provide advice to businesses. Our corporate advisory area, our financial advisory area, which provides financial advice. Our forensic services division, again, helps with, legal matters in terms of quantifying loss. Insolvency and reconstruction, and our lending solutions business. So if you need any assistance with finance in terms of your business, also think of us. Thank you for listening.